Good morning, everybody. I trust that you are well. If you've received this video from me, it means that you are one of my existing clients and you are a shareholder in one of the 7 Guernsey incorporated Bermuda listed companies. I know some of you are invested in more than one of these companies, but I wanted to bring to your attention that Asia Pacific, there's some secondary shares available in Asia Pacific. With the Rand being as strong as it currently is, I know some of you are going to consider taking some more money offshore, and the question is always where to put it. So I'm of the opinion that currently this is the best place where you can put it. It's like buying the ticket after the horse has won the race, as it provides you with 100% capital protection in dollars, and it also provides you with a geared upside that is linked to markets. You are all familiar with the structure and how it works. Let's just briefly have a look at what was the status quo when Asia Pacific traded on the 22nd of December 2017. You will note that the investment provided a 240% participation to the following markets: 40% exposure to the top 500 companies listed in America, 30% exposure to the top 50 companies listed in Europe, 15% exposure to the top 225 companies listed in Japan, and a 15% exposure to the MSCI emerging markets. So that is from an upside perspective. So whatever the weighted movement was times 2.4 is what you could expect to receive, and the investment was capped at 59.23% over the 5-year term. This is now obviously different for an investor coming in now, as currently there's only 3.5 years left to maturity, but you will note that there's not a big difference in terms of the maximum upside that one can receive should you invest today. I think this comes down from 59 to 52% in dollars, but we'll have a look at the internal rates of returns and what that equates to. So this is from the upside perspective, linked to equity markets with a geared return, and then from the capital guarantee point of view, it was linked to Investec Limited sub-debt tier 2 capital. As you can recall, $1,327 is what the par value of the share was, and of that they've placed $1,027 per share with Investec, which will accrue interest and mature at $1,380, which was 4% higher than the initial capital that you put in. This changes slightly for a new investor, as you won't be receiving the guaranteed 4% that the initial investors got. So let's just have a look at a summary that Investec prepared for me that summarizes the status quo as at the 15th of July. So you will note that the underlying indices are up 2.58% since the 22nd of December 2017, and the market value of the share is up 4.38%. But what you need to focus on is these 2 blocks that I've highlighted here, which basically explains negative scenarios at expiry and positive scenarios at expiry. So let's just first look at the negative scenarios at expiry. And what I mean by negative, let's assume markets fall from current levels 5, 10, 15, 20, 25%. What they're illustrating here is what will happen to your capital and what's the maximum that you can lose should these market conditions play out. And you will note that the maximum that you can lose in any one of these scenarios, even if you make that minus 30, minus 40, minus 50, the maximum that you stand to lose in dollars is 0.36 per annum. 0.36% per annum. So we can say that 99.64% of your capital is guaranteed in dollars. If we have a look at the positive scenarios, if markets increase by 5, 10, 15, 20, 25, up to 40% over the next 3.5 years, what return can you expect? If markets go up 5, you can expect 7.87. If it goes up 10, you can expect 19.38. You can see there that's almost 200% gearing, and that increases slightly up to a maximum of 52% that you can receive when markets hit 25% from where it is today. So just to summarize, maximum that you can lose 0.36%, maximum that you can make is 52.55%. So if we have a look at what does that equate to over a 3.5 year term, just ignore the rands there. You will recall on the previous slide that I showed you that the current share price is $1,385. So if we use that $1,385 and we multiply that by the maximum that you can receive, which was 52.55%, you will see you get to a figure of $2,112. So if you put that as your end balance, once again just ignore the rands there, and you calculate the IRR, we get 12.76% per annum that you can make in dollars over the next 3.5 years. And for you to get the 52%, markets only have to increase by 25%. So from a probability perspective, the probability is a lot higher that the markets will yield 25% over the next 3.5 years than it will delivering more than 52% over the next 3.5 years. So once again, I think a very attractive feature of the share is the 240% gearing, as markets doesn't, muted returns from markets will give you a proper real return. So that is it. I think if you have some money that you're contemplating, if you want to take offshore, please get in touch with me so that I can explain this to you in more detail. But from where I'm standing, this is currently the best place that you can put money if you're taking money offshore. You guys are familiar with the structure. You know that you can lock in your gains in future without triggering tax events. Some of you have experienced the rollovers. You've experienced the profits that were made, and the capital guarantees that were reset. So please do not hesitate to contact me should you want any further information on the secondary shares in Asia Pacific that is currently available. Have a good weekend. Keep well. Bye.